Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 26, 2025, and we're diving into the latest earnings report from Gamehaus, a leading technology-driven mobile game publisher. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Gamehaus has just released its unaudited financial results for the first quarter of fiscal year 2026, and there's a lot to unpack, from revenue shifts to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Gamehaus reported a total revenue of $27.7 million for the first quarter of fiscal year 2026, which is a 7.5% decrease compared to the same period last year. However, the net income increased by 17.6% to $1.8 million. John, can you explain this dynamic?
Absolutely. The revenue decline is primarily due to a strategic reduction in user acquisition spending, which impacted both in-app purchases and advertising revenue. Despite this, Gamehaus managed to increase its net income by focusing on cost efficiencies, reducing operating expenses by 6.2%, and enhancing in-game content to drive engagement among existing users.
Operational efficiencies and future outlook. Gamehaus has also reported a reduction in operating costs and expenses to $26.7 million. However, research and development expenses saw an 18.3% increase. What does this tell us about their operational strategy?
The increase in R&D spending highlights Gamehaus's commitment to innovation and strategic collaborations with developers. This is part of their Gamehaus 2.0 strategy, which focuses on integrating AI and enhancing their publishing stack. The company is also preparing to launch new titles in the puzzle and RPG genres, which could drive future growth. Their revenue guidance for the next quarter is between $24 million and $27 million, reflecting cautious optimism.
Strategic initiatives and market position. Gamehaus is making strategic moves with its Gamehaus 2.0 initiative and AI integration. How do these efforts position them in the market?
Gamehaus is leveraging AI to improve operational predictability and long-term business economics. Their focus on developing new game categories like puzzle and RPG is aimed at diversifying their portfolio and capturing new market segments. Additionally, their $5 million share repurchase plan indicates confidence in their financial health, supported by a solid cash reserve of $15.3 million.
CEO's vision and strategic direction. Mr. Feng Xie, the founder and chairman of Gamehaus, has shared his vision for the company. What are the key takeaways from his statement?
Mr. Xie emphasized the company's transition towards a more disciplined and scalable operating model. He highlighted the integration of AI across their publishing stack as a key pillar of their strategy, which is expected to enhance operational predictability and drive sustainable growth. His focus remains on executing their strategic initiatives to create long-term value for players, partners, and shareholders.
Key takeaways. In summary, Gamehaus has shown resilience in its financial performance despite a revenue decline, with a strong focus on strategic initiatives and cost efficiencies. Their investment in R&D and AI integration positions them well for future growth. Thank you, John, for your insights.
Thank you. Gamehaus's strategic focus and disciplined approach are promising for long-term investors. It's an exciting time for the company as they continue to innovate and expand their market presence.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Gamehaus's performance in the comments below.